So the bottom is not in. And I will show you in this video what should have happened in order for us to make a clear statement that yes, this could be the bottom. And I am sure that everyone was waiting for the capitulation, which I was also talking about for a very long time. But unfortunately, this is not the case. And let me tell you why. Now, as you probably noticed, the Bitcoin is at 16,800. It went down to 15,000 something. Yeah, 15,700. And we are talking about capitulation for a very long time, you know. And I was also saying that, okay, I'm waiting for a big dump again for a 20, 30, 50% in order to claim that, yes, this is the bottom and I will start buying. Now, don't get me wrong. I am still buying. I'm DCAing every month because you never know where is the bottom. However, you can have an educated guess. And I will show you in this video what information I use to take this guess and to increase my DCA month to month. Now let's just run through how the coins are behaving, let's say. So Bitcoin 16,700, 800 as we discussed, Ethereum 1200, which is still quite good because it didn't reach the previous lower low or the lowest point this year, which Bitcoin broke through yesterday. eGold, I have to say, I am pretty amazed by eGold. I was expecting eGold to go down to the 30-20s because Solana went down to 14, even 12. Now, with Solana, it's a bit different, and here is why. Solana, I mean, there were rumors that Solana is used by FTX as collateral for another loan. Now, I saw some news on Twitter and YouTube that this could be the bottom because after such a big dump, everyone is going to buy, but that's not true. And the reason is what we all fear and what we don't want, and that is the isolated crash in crypto, which happened right now. I mean, yesterday, which was obviously induced by FTX and Binance. If you don't know what happened with them, check my other video from yesterday. I will link it here in the card somewhere. You can find it. Now, why I think that this is not the bottom. Obviously, as I said, this was an isolated crash because as you can see, and yeah, if we check the stock market, you know, the S&P 500, it didn't crash. Yes, it went down to 1-2%, but this is not a crash. And now I think for the first time, I wanted to show you this comparison between the 2008 crash and the 2022 to be crash, let's say. That is what I'm waiting for. So we still have 6 months. Just saying, and that is where I think that things might turn around. And I'm not basing my information or my conclusion only on this chart. I also have the UK 100, the Germany 40. You guys know that I like to watch the German index because I think Germany is a very big player in the EU's economical area. However, we do have a couple of other things. For example, the Fed's last meeting minutes. Because Jerome Powell said that they are going to increase the rate hikes and they are going to continue so. And the last rate hike will be so high that no analyst will expect it. And that will probably be in the Q2, Q3 of 2023. So that is what they project, that is what they expect. Now, before I show you the other indicators or information, I just wanted to say one more thing. As you can see, or probably remember, last week we had a pump from 19,000 or 18,900 to 21,500. No one knew why. Well, I tell you why. It's because of the unemployment indicator. So as you can see, and here is with gray, everything which is highlighted with gray is a recession, okay? And this is the indicator for the unemployment rate. It means that this is the line chart where they monitor how many people are turning to the state to ask for help. Now, usually when unemployment rate goes the highest, that is when the recession ends, okay? Not starts, ends, because this is a lagging indicator. Lagging indicator means that when it goes to the peak, that already happened, maybe months before, but weeks at least. Now, the reason is that by the time they log all the unemployed people in the system, they are already fired, they are already made redundant, and all the companies went bankrupt. That is why, as you can see here as well, in the 82, in 2002, in 2009, by the time it went to the peak, the recession ended and everything started to go up. Therefore, what we had last thing is this, and this is what I was also waiting for. I don't know if you can see, so I will just move this a little bit to the right because I'm not sure if you can see this one, but probably you should see it right now. I will just move one bit to the left. As you can see, this is the last month's chart, and the unemployment rate was going down for the last 1 year since the COVID crash. Okay, I mean, obviously we knew that pandemic started, lots of companies closed, or I don't want to say went bankrupt, because eventually some of them were saved by the governments, but many people lost their jobs. And after that they started to hire again, because they just figured out that, okay, a lot of people can work from home. Now this went down very low, and it is at 3.5, and before that we had 3.5 again. That was just before the pandemic. And if we want to check another low unemployment rate, it was 4.4. Okay, it didn't really go under 4. This is like a very good indicator to check whether a recession is coming or not. Now we were at 3.5, and after that the last one is 3.7, meaning the unemployment rate started to go up. So this could tell us that the recession is at the bottom, is at the end, and from here we will probably pump. However, we have a couple of other things we need to check. And that is, for example, the S&P 500, as I just mentioned, because it still didn't crash. This was merely a correction, I think. My opinion only, not financial advice, as you know. And I'm still waiting for something like this. This would be a crash. The other one, a lot of credits are out and people just started not to pay it back. So yes, unemployment rate is starting to increase, but that is like a domino effect. Okay, that is the first thing of a domino effect, because people will not be able to pay their mortgages, their credits, unfortunately, because they don't make money. Okay, that is the first tipping point of the domino effect of the chain. Therefore, after they stop to pay for their credits and mortgages, banks will get in trouble because they don't receive the monthly income which they are relying on. Okay, because usually they give out more credit than they can afford. Here is the other one. When banks start to fall, obviously when mortgages are not paid, which are the first thing which are paid in the credit, you can imagine that the credit card debts, which I used to buy TV and washing machine and all that shit stuff which you want to have new, and you just take a 1-year loan for that, because I don't understand those people, so don't do that, okay, especially in these times. People obviously cannot pay them back either. Therefore, the banks will call up the insurance companies and they will say, hey, the thing is that people cannot pay me back. Therefore, as you know, we insure the whole amount with you guys, and we need the money because we need to pay our employees, and we need to give out the couple $1 million bonus for our CEOs and executives. Therefore, please pay up. Now, the thing is that insurance companies don't work that way. They don't hold the entire money which they insure the other companies for. Why? Because they have a risk level calculation, and they know that it is just impossible, or maybe improbable, that all the companies go down at the same time if there is no recession. Because if there is recession, yeah, they all go down almost at the same time. And that's why the governments need to bail them out. But today, as it stands right now, governments don't have money because they didn't invest in crypto in 2020. I'm just joking. Obviously, they don't have money. So what can they do? Well, they need to bail out their friends. And that could mean that, one, they print money, which will just increase the inflation. So for what they fought in the last 1 year, it will be erased entirely. And that already happens in the UK and Germany. So probably US will follow through. I don't know. Second, they can borrow. The problem is that they are already raising the debt ceiling, and they already have so much debt that it's just unbelievable how they can pay it back. I mean, for the US, the debt is 150%, I think, of their GDP for 1 year. That means that they would need to give for 1.5 years all the money which flows into the government to other countries to pay back their debt. So what they can do? Well, one thing, they can leave the banks fail, which I don't think it will happen, but some may. Second, they borrow more. And here comes in BlackRock, because BlackRock also helped out the government in 2008. If you don't know BlackRock, I will link a video here. So yeah, it's very interesting to see how things are evolving. As I said, I don't think this is the bottom, because the bottom will be when everything or all of these happens almost at the same time, when the pain will be so big, unemployment rate will be very high, companies will be bankrupt one by one every week, and that is when the bottom will happen. And that is when we need to start buying in a bigger pace. So what is the best to have at that time? Obviously cash. And if it's possible, and I hope that nothing happens to stablecoin, I will keep some in stablecoin, I keep some in banks, and I keep in 3 different currencies, because as you can see, pound is going down, dollar is going up. I don't know in what currency to hold my money right now. I don't think any of it is good, but it's better than in assets, because I just feel that everything will start to collapse at the time when we don't even expect. So make sure that you know what you're doing. Make sure that you feel the real pain. Then you will have some cash put aside, which is not affecting your day-to-day life. Make sure that you have a steady income. That is the most important, to have a steady income. If you have a beef with your manager, put that aside and wait 1 year with it, because I think all of this will just run down by the summer of next year, and we might be able to make some serious cash from that point. Hope you like this content. If you did, press the subscribe button, my friend, and I'll see you in the next video.